Welcome to the Daily Insights That Matter. The US inflation data was released yesterday and the US is finally starting to catch a break. After months of high inflation rates, US inflation is below 5% for the first time in 2 years. Inflation, the pace at which price rises, came in at 4.9% in March. That was down from 5% in March and marks the 10th month in a row that price rises have slowed down. Inflation in the US peaked last June at 9.1%, the highest it has been since 1981. The fall comes after the US central bank has sharply raised interest rates to try to control inflation. While headline inflation is easing, core inflation, which excludes volatile food and energy prices, was up 0.4% on a monthly basis and 5.5% from a year ago. Core prices remain elevated due to persistently strong shelter costs. Housing prices changes can take time to show up in the inflation data due to the lag in mortgage and rental contracts. Price increases have moderated in the United States in the month of April, but there are some worrying details. Another important point to note is that inflation has decreased from its peak of 9.1% in June last year, but it is still above the target set by the Fed, which is 2%. However, the annual increase in the overall consumer prices slowing below 5% for the first time in 2 years is positive news. The FMCG sector in India witnessed a significant rebound in the first quarter of 2023 after a prolonged period of decline. It recorded a double-digit value growth of 10.2% and volumes that have turned positive after 6 quarters of decline. Let's discuss this. The FMCG sector recorded positive volume growth for the rural sector of 0.3% after 6 quarters of decline. Urban markets maintained their steady growth rate and registered a 5.3% growth, bringing the overall volume growth to 3.1% for the January to March quarter. The breakup data shows that foods grew at 4.3% and HPC, which entails home and personal care, rose 0.2% only. Among the channels of distribution, traditional trade, which includes kirana stores, witnessed consumption growth revival of 1.9%, while modern trade formats such as hypermarkets, shopping malls, etc. retained double-digit growth of 14.6%. The growth in the FMCG sector has been driven by the revival of consumption in rural markets and traditional trade, which were under a stress for more than a year. Though urban consumption is the growth engine for this sector, 2/3 of India's population reside in the rural areas, which can significantly contribute to the growth and consumption patterns of this sector. Additionally, the overall inflation dropping aided a revival in the consumption and led to the growth in this quarter. So what does all of these news mean for you? While the last couple of months have shown inflation cooling, it does remain high and well above the Fed's target of 2%. But the inflation rate easing for the 10th straight month is a positive factor, adding some respite to the Fed. This will have an indirect, neutral impact on you. According to NIQ, the FMCG market would grow at 7 to 9% for the full year in 2023. Additionally, as inflation eases, it will leave more disposable income, leading to better consumption patterns. This will have an indirect positive impact on you. While I say this is me, Rahul Hassan, signing off. Have a great day and stay safe.
Did you like watching this video? Then download our app, Informed Investor, to watch more such informative and interesting videos.
Equity investments are subject to market risk. Read all investment-related documents carefully. Visit www.researchandranking.com